Welcome to a review of Phoenix real estate in 2021 and a look at factors that will affect 2022. Hi, I'm Gordon Baker with the RE/MAX Alliance Group, and today we'll be reviewing how 2021 finished and what is ahead for the next 6 months. You could have almost predicted this next chart that shows the inventory of resale homes for sale. Not a lot of movement from last year's beginning number, and as I've mentioned before, supply or inventory is the main driver behind appreciation right now. We're starting this year a little bit below 2021's beginning number, but remember, this is for resale homes. Builders are doing their best to take up the slack, as you can see in this graph showing the new private housing building permits over many years. In 2020, building permits for Arizona was over 60,000, and I'm sure that 2021 was at least that number or higher. Adjusting this for population, Arizona is high on the list for new construction on a per capita basis, giving buyers more options. This leads into home price appreciation that we saw in 2021. Here's a graph showing the median sales price for the greater Phoenix area, including Maricopa and Pinal counties, an increase of 29%. The two questions obviously come to mind when you see this are the sustainability of this type of increase and affordability, since prices are increasing ahead of wage growth. Rental prices are also showing strong gains as demonstrated here. Another factor that is impossible to quantify is the pandemic to endemic effect. I think the population as a whole is feeling less risk and more comfortable in getting out and moving about. I've noticed an increase in out-of-state buyers saying that they're planning trips to Arizona in the first quarter. A step towards normalcy? I sure hope so. Here's my 10-second commercial. Do me a favor and like this video if you're learning something, and subscribe if you'd like to learn more in the future. Okay, done with that. Right now, it looks like a couple of things could affect the market or may not as much as we anticipated. First of all, our interest rates, which some expect to rise. Any change will definitely affect a buyer's purchasing ability. It was not too long ago when getting an interest rate under 3% was possible. It was even a badge of honor. That window is closing, and most interest rates are in the low threes. So to demonstrate the impact of rising interest rates, let's look at what happens when the rates rise from 3.25% to 3.75%, a 0.5% increase. Assume a $500,000 purchase price with 10% down and $450,000 loan at 3.25%. The principal and interest payment without taxes or insurance is $1,958. When we raise the interest rate to 3.75%, the payment on the same amount rises to $2,084, a $126 increase or 6.4%. At 4%, the payment is now $2,148, a $109 increase or 9.7% increase. So keep an eye on interest rates, because this will definitely affect a buyer's budget and impact the appreciation I think we've seen. Something that I thought would impact the market more than it probably will is the winding down of the foreclosure moratorium. Initially, we saw levels of homeowners in forbearance and seriously delinquent loans, which are 90 plus days past due. With time, both of these have trended downward favorably. At the end of December 2021, there were 1 million loans that were 90 plus days past due, 2.5 times above pre-pandemic levels, but the continuing trend is favorable. In the fourth quarter of 2021, the government extended the forbearance deadline again, so it will not come to a complete end until sometime in 2022. Now, this is all upstream data, so let's look at the ground level and see the impact on the market so far. In a recent search of the MLS for bank-owned properties that are active, pending, or have sold within the last 90 days, there was a total of 56. That's it. Now, in the unfortunate circumstance where someone cannot come to a workout plan with the bank, homeowners are in an equity-rich environment, different from the previous crash. If the property is in sellable condition, with recent appreciation, the owner will be able to sell it and walk away with a check. Now, here's a news outlet that believes that there will not be a tsunami of foreclosures. So what does this all mean? Most likely, we will not see a wave of foreclosures. If anything, it will give a minor boost to the inventory situation. Rising interest rates could reduce buyers' enthusiasm when added to already high prices. And affordability has to come into play at some point to moderate prices. With low inventory, it would be hard to see a major price decline. And please remember, whenever you hear any nationwide statistic or narrative, remember, real estate is local. So reach out to me with any questions. Thank you.